The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon Eastern Time. My pleasure to take your calls here at 877-927-6648, just like Steve Rhodes did for 2 hours. Fabulous 2 hours, as always. Great deal of information. That's what we try to do here at TFNN. Straight after me comes Larry Pesavento, and you know with Larry, today being the odd day of the week where he goes through charts and very different charts. He looks at futures and commodities mostly on a Thursday. I don't want to speak for him, but that's kind of what he does. And so a lot of information there. Whoa, lots going on in the commodities. And let's see, after that you get Daryl Martin. Don't forget, Daryl and Tom will be together this coming Saturday. I believe it's in Colorado, so just check out that front page if you want to learn about this fabulous methodology and system that Daryl's been working on and developed, the box theory and diagnostic trading hour that he holds. Please tune in and also get to that workshop. Should be 4 hours of absolute tremendous information. How to use leverage just in the best possible way, knowing precisely. And what's actually fun about it is you can be totally wrong for 3 or 4 or 5 or 6 hours, and the last half hour, you know how the market sometimes turns around the last half hour, bam, you could suddenly be back in the money again. It's just a nice way of looking at markets. Then, of course, what is it? Oh, then Dave White Trading Hour with his fabulous call the other day on Triple D, that's DDD systems, 3D systems. And let's see who we got. Oh, Ken Shreve, of course. Ken Shreve, our expert on the Investors Business Daily methodology. And then, of course, our expert in gold and real estate and everything else. Right here, our boss, Tom O'Brien, 4 o'clock till 6 o'clock, wraps it up. And, of course, we've got the Great Panther series going on right now. So just stay tuned. Of course, Futures Hour comes right after me at noon. And I'm right here, 877-927-6648. Wow. There are certain things that are going on here that are just, in a sense, they are textbook, and in another sense, they are, how can I put it? They are mind-bending if you have been of a particular bias for a while, and that expectation is not being fulfilled, because every single day, every time the market pulls back, pop, it comes right back up. And that can be very frustrating to bears. What we have done in my opening call, we have, I can't believe it, we have, I believe it's 9 positions. We've got, we had 6 longs. One was taken out yesterday for a nice 5-point profit. We got back in this morning, lower down, just as a more, because it needs leg D. I'm going to talk about that in a moment in the ChapmanWave methodology, why I'm expecting, even with what's going on, we should get a nominal new high, and I really mean it, a nominal new high in the Dow, in the SPY, not the S&P. Well, it'll happen in the S&P, but it won't be the leg D that's missing. You got peak C in the Dow. Let me just do this here. Peak C in the Dow, that was made on the 29th of 13,969.99. Just has to go 1 penny above it for leg D. Look what's happening. This is what I showed my subscribers to my opening call. Wait, let me just finish that thought. 6 longs, 1 was taken off, 1 went back on today. And we had 3 shorts. 1 was taken out with a 1%, maybe 1.2% loss. I'll be back with this, but I tightened it up. I mean, on a $360 stop to lose, 1% is, I think that's pretty reasonable. But we have another short that seems to be is working right now. And then we have an index short because I wanted to be prepared because I've got these conflicting labels in the ChapmanWave. For instance, the Dow Diamonds have made an E. And the MACD is still good. Stochastics at 94%. The S&P, SPX.X in the ChapmanWave, you expect to get to at least a D, has made a peak D. But wait a minute. The SPY is only in C. It missed it by a few cents, being called the C. see that, so that it could have been a D right now. Missed it by a few cents the other day. Went from 150.25 to 150.33. That's only 8 cents. Big deal. No, it's a big deal in my work. 1 penny makes a difference. And I have to be strict with my rule. But what it is, it's kind of confirming in many ways what I'm looking at in the methodology itself. So IWB, look at this, IWM, this is the Russell 2000, has made a peak D, holding quite nicely right on the 9-period moving average, with the stochastic still at 85%. But the IWB, the 1000, has made a peak C. I have just too many of these peak Cs, so this is the pattern that I've been looking at, and I've been talking about it with my subscribers. I outlined this because I show all these charts, just an incredible amount of work every single day. I probably do for a daily market call, something that many newsletters, if you look, go through all those newsletters out there, thousands and thousands of newsletters. I tend to do a lot of work, so I do it in a day, what many do in probably a week. But I love doing it, and I have to do it because I need to get that big composite picture always. So look at this. I drew that the 139.38 and the 120-minute diamonds was, in fact, peak F, and I drew in a cup formation saying there should be one spike to the upside to get to leg G/C. And I even said 139.40s, and I circled the target. And I said that should coincide with the Dow going to a leg D. Well, it hasn't. This is perfect, except for one thing. We haven't got the Dow. Look at this. The Dow is in peak C, and the S&P is in peak D in the daily. You've got the VIX making a peak E at 14.43. I think that was the high of the day, 14.43. It could go higher, but at least for now, it's a potential peak E. And you've got the 120-minute chart at peak F. Yes, without any of the technicals. So this is going to be very interesting. Why? Oops, I got F, and this is a G. Oh, the diamonds. This is the diamonds. That's the Dow. So what is really interesting, as far as I'm concerned, is that there is synchronicity. We do not have synchronicity right around. I like to have that. But I also like to prepare, because once in a while, it's usually once in a while, with my stalk leg formation, it goes to a peak C in the Dow, and it goes to a peak D in the diamonds. Historically, only a few times, but enough times in this pattern to say, be prepared that we might not make it at this particular point. It might be later on. So that's what we've done. So here's what I'm looking at. I want to just quickly show this chart because it's up, and I'm going to go through this right now. Look, you see that? This is the Dow weekly. This is the S&P weekly. This is the NDX, which is failing. That's because Apple's acting so weak. And this is the transportation index. Have a look at these two charts. You tell me. People always say to me, hey, I'm in the Dow 30 stocks, the S&P's 500. Have a look at these charts, and you tell me, if I said to you which one is the Dow, which one is the S&P, I don't believe you'd be able to identify which is which. They move in pretty much sync. And that's all I need to know. There are times when they miss by a couple of months. Remember, in 2000, in January, I think the 14th, the Dow went to its high, and it was 3 months later the S&P and the Nasdaq went to its major high. So here we go. Let me run the numbers then. The Dow is down 27 at 13,882. No. I have to finish that thought. I don't want to jump ahead. What I'm expecting is that, as I've drawn in the other chart, I'll do it right here. I'm expecting the pattern that I call the ChapmanWave stalk leg formation. Is it going to happen? I don't know. But all I can say is that there is enough evidence. Look, this is the leg. Even though it's made up of different peaks, the entire thing is a leg. This is the body, the oval body that I'm looking at. Body with a Y. This will be the neck if there's a breakout, but that has to still make a leg D. and then you come down. So I'm anticipating that the it was the wrong chart. It doesn't matter. It's the same formation. There. I'm anticipating the Dow that the 13,818 to 13,730-ish area is going to be good support. There's going to be a sudden spike. It might be before it gets there. I'm thinking it's before it gets there. It might be tomorrow. It might be Monday. There's a sudden pop to a leg D. That leg D, I don't think is going to hold very long. It's going to pop above and then come back down into this formation here, and then this formation should wiggle around for 3 to 7 sessions, maybe longer. I'd prefer it to be longer. Maybe not even breaking 13,600, 13,500. That's really key support. And on the upside, not breaking the 14,020s. I wanted to get that out. I also wanted to say in the weekly chart, you see there's a resistance here. I'm calling this new leg B. See that dashed line resistance? I call that the inside track in the ChapmanWave. That's the methodology that I work on. That says it's bumping right into resistance. You can expect some kind of a pullback over the next week. The monthly chart, I have in leg C. Now let's go on with the numbers. S&P is down 2.5 at 14.99. The comp index is down 1 at 31.40. Gold is down 17. You know, it looked fantastic yesterday. I'm not fooled. I do not believe it. I believe strongly in my ChapmanWave methodology. I believe that gold is in a sell mode in the monthly chart. And then it might be in a trading range, but it's a fairly wide trading range. If GLD breaks 158 support, there'll be a quick slide to the 152s. Meantime, it's in the trading range, but it cannot close above, so far on a weekly basis, to had a terrible time trying to close above the 9-period exponential moving average that it couldn't close since it broke down from the 30th week of the 30th of November of 2012. And this is what I'm looking at here. So let's just jump to the dollar because I'll get all this out the way. Oh, I'm sorry. I just looked to the right and I see there are a bunch of callers. I'm sorry, Mark in Denver, you want to call about the XLE? I will cover the XLE. I can't even remember what I was going to do. The XLE, the dollar DXY. In a moment, do you remember it was at peak C? Let me just finish this. The Dow, the SPY, the XLE, the IWB, and even General Electric need to make that requisite leg D. So I hope that clears it up for you. Yes, XLE has pulled back a little bit, but I do believe that this Energy S&P Spider Select ETF, I do believe it's going to have one more spike to the upside. Now, here's the dollar. The dollar broke the 79.26 low. It's at 79.13. It's trying to test the 78.93 area to 78.60. That's going to be key, and that could correspond with the first decent bounce there and the first decent bounce in the TLT. And I've got a bunch of questions here about gold, copper, and all sorts of things. I'll be right back with John in Philly. And, John dropped off. It's Mark. Mark is still there. Mark, I'll be right back with you straight after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tiger Technicians out. Dow's down 25. S&P's down 3.5. And we actually have on the line... right, first I have to say, our Great Panther Silver winner this hour is... Tyrone from Waldwick, New Jersey. Tyrone wins a half-ounce silver bar from Great Panther Silver and TFNN. Congratulations, Tyrone. Yay! Wow, we're just giving these things away every hour. You can go to the front page of TFNN and still check it out. You can sign up. Tomorrow is a fantastic day. Tomorrow there's even a greater ounce than the half ounce as a giveaway. So please be sure to sign up. And so we've got, if it's still waiting, Mark, you're still there.
Yes. Hello.
Hi, thanks for your patience. So you wanted to look at the XLE. So I have XLE as in peak C in the ChapmanWave. The MACD is still very strong. Stochastics at 90%. The on-balance volume has dipped down, but it looks like there's room for one more bounce. I have a doji type candle in the weekly, but the week has to wait until 4 o'clock tomorrow to know where it's going to close. But so far, it's a long-legged wick. But the monthly, because the month closes out today at 4 o'clock, and so far the monthly is above the declining trend line. Now, it's one of my least favorite. It's a symmetric triangle. I say it's my least favorite only in that, here you are, you're waiting. When it finally pops out above it, it's usually so close to the left side peak, which would be the next target, that it's almost like it's like stating the obvious. Not to say it doesn't work. It's just that it's kind of a retrospect one. You wait and wait and wait. When it pops out, it usually pops out quite strongly. And this is what it's done. The MACD, if it closes anywhere here today, will be the first time it's closed positively since it broke down back in 2011. And the stochastic is improving, but it isn't at 80%. It's at 74%. On a intermediate term basis, the stochastic's at 91% in the weekly, and the MACD is good. I've got this as leg D. So now the situation is this. So what position are you in right now?
Well, we talked about this the other day, and I got a little spooked. I had gotten short when it broke through a little bit over its high, and I luckily didn't panic and get out quickly. And I actually got out of my shorts this morning for a small profit. And then, based on what we talked about the other day, I thought I'd do just a really small bet. Did a little of what I would call a white lightning trade for tomorrow. I'm thinking we might be able to make that peak D tomorrow. Just got a quick little call that expires tomorrow. I got the 77.50, so we could spike back up above the high.
So this is the weekly. This trades on a weekly call basis?
Yeah.
Okay, great. Okay, if that's the case, well, you understand, you've articulated, I'm sorry, I didn't realize that, Mark, can you hold on 1 second? I didn't realize that Tyrone is on the line, and I want to congratulate him live. Hold on, can you hold on for 1 more second? Okay, Tyrone, you there? Oh, I hope I now didn't cut off Mark. Tyrone, are you there? Oh, maybe I did that a little too quickly. Oh, now I messed up all the lines. What can I say? Well, I hope my engineer is able to get Tyrone back. Tyrone's around. Just shout out, I'm here. I'm so sorry I couldn't speak with you personally. So now, did I just bump Mark off? Ask my engineer, is Mark gone? Ay. That was not very good, but I thought once someone was waiting online, I was supposed to congratulate them. Mark is not there. Oh, I did not mean to bump Mark off the line. That was a big mistake. Mark is back. Hi, Mark, you're back. Whew. Mark, you there?
Yes.
Okay, so now this is what I wanted to say to you. See, the 120-minute chart has pulled back a little bit deeper than I would have liked, but it's peak C. And that says, yes, it should, but it might do it Monday. But you understand exactly what you've done. You've got the chance that tomorrow is the day that we spike in the Dow to that leg D, we spike in GE, etc. It might not happen, but that's the chances you took. Now what I would do is I would have the patience, because if there is a leg D, if it goes 1 penny, if it doesn't make it today, which I don't think it's going to, but if it does it, forget about the option that you have. But if it goes above 78.59 on Monday and then starts to sink and the market just has a big spike either tomorrow or Monday, but by midday it's giving it all back, that's going to say to me the scenario I've outlined is probably working. And that would say to me also that you should, that's where you could reinitiate that short position with a very tight stop.
Yeah, the other reason I thought I'd take a flyer on it is there's two big components of the XLE reporting tomorrow morning. That's Exxon and Chevron.
Oh, is it? Oh, well, you know what? You've got everything working, and Exxon's an A, B, C, D, E, peak E, and Chevron CVX is in. Have I got it notated? Peak C. Peak C. Yeah. Hey, good. Congratulations. Let's see how it works out.
Okay.
Thank you, Mark.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and I'm really thrilled to say that Tyrone called back. Tyrone, you there? Tyrone, you there? Tyrone had called back. Oh, Tyrone dropped. Oh, he's probably at work trying to squeeze and go to the bathroom quickly and make a call. Oh, Tyrone, I'm sorry that I haven't been able to speak to you. Just any time during the show, you call back, and the moment my engineer types in Tyrone, I'm stopping everything to congratulate you on being the winner of the Great Panther Silver giveaway and TFNN giveaway. So... All right, let's go back to Mark, and we just Mark dropped. Mark is gone. Yeah, I think I completed with Mark. Other than to say, Mark, CVX has a leg D still to come. The 120 minutes just pulled back a little bit. We'll see what happens. In fact, you know what? We had it for fun. Mark, you can even call back tomorrow. We'll do it during the show and see exactly what's happening. So we're going to go to, who do I have? I have Michael in Boulder, Colorado. Hi, Michael. How are you doing?
Hey, Basil. How are you?
I'm good.
Good. I was looking at the JO, but I was looking at the coffee contract too.
Right.
On the monthly.
So it's the funniest thing. I never ever remember the symbol of this. And every time I see JO go by, or I type in JO, I look at it and say, "Oh, that's the coffee contract." Just remind me again what the coffee contract is. It's K. What are the letters? It's what?
KC. Yeah.
KCH, because I know I've done it. I just never remember. I don't trade it. So, there it is. So KC in the it looks the same. Has made a peak C and is kind of failing. So do you have any position at all, or you're just kind of looking at it and saying maybe there's a chance that it's going to double bottom here? Is that kind of what you're looking at?
Exactly.
Okay. You know what I would do with this? Because the weekly chart for the very first time is just starting to improve, I don't like the speed and the continuousness of the decline that we've just seen. I'm going to recommend in this case, I bet this is one that I would love to recommend, that if you give Larry, maybe you haven't got time, but if you give Larry a call on the coffee contract, I wouldn't be surprised if this is something that he watches. But let me just give you my analysis. I drew in a left side, right side price time match on this before, and it got there in a shorter period of time, back to the 35.58 on the JO. That is JO. It's called the iPath Dow Jones AIG Coffee ETN. So an ETN is very different to an ETF. An ETN is really paper. It's put together with pieces of paper, whereas an ETF, invariably there has to be a physical a product that is backing the ETF itself. So in this particular case, what I'm looking at is there is a chance that it's going to get past that ugly candle of the 22nd. You saw that. It should really have gone to one more high and then pulled back, and it failed at a peak C. That says to me, a little more weakness than I would like to consider as being prudent for an entry. You know what I'm going to recommend? I don't think you're going to lose anything by waiting not for one day, but into Monday. And let me explain what I'm looking at. On a weekly basis, if it's able to close tomorrow, it's a 33.20. If somehow it can close over 34.12 to 34.25-ish, I would say, you know what? You know exactly where your stop is. Your stop is underneath the 124, the low of the 24th of 32.88. I don't know what this is the contract. This is the ETN. I don't know how much it trades in terms of. Do you buy the futures, or would you would buy the ETN?
The ETN.
Okay, so I'm just going to recommend. There's a pattern that's forming now that I call the dreaded H. It looks like a lowercase h. Yeah. If in the next 2 days it doesn't take out 32.88, but it's able to close above 33.75, I then would say to you, now's the time to take a very small position. But I look at the weekly chart, and the weekly chart says if and when it takes out 35.58, that'll be the very first time that it's been able to exceed a second leg up in the weekly chart. And, Larry just typed in, I will cover coffee today. That's great. So I'm going to recommend, this is my own position right now, is that I would look at this only if it shows strength and it closes above 33.75, and I would only start a small position. I would start adding to that position if it made higher stair-step moves and it was able to get to 34.46-ish, somewhere around there. Why? Because it says, wow, that following week, it could finally try to test the high of 35.58, either that week or the following week. If it takes out 32.88, I'm talking about the ETN, that would be not good at all. And KCH13 is the ETF. I just want to see. Yeah, it corresponds. The contract itself, this is the March contract, 146.10 is the level. If it takes it out, I'd say hold on, nothing yet. But Larry is going to cover it. I recommend, if you don't mind, hold on for the next hour, the next show, and either call Larry but he will be covering it, and that would be my recommendation. He's just posted a beautiful butterfly that is, that's a butterfly, and it's had a very nice move up, and now it's testing support. So I would go with Larry's analysis. My own analysis is just what I've covered, that I would only start a position if it starts to show strength. I don't want to buy weakness, I want to buy strength. Weakness says to me it could get into the Roman candle, the ugly Roman candle of the 4th of January, and that would be JO, that would be it's a different pattern. All right. No, it's the 31st of December. That's the one that I'd be really careful of. Because if it starts to get into the 31.90 area, on the JO, on the ETN, it could retest the bottom. I want to see strength. I'd prefer to nibble on strength. So I hope that helps you, but stay tuned for Larry.
It does. Thanks, Basil. I have another, just a quick little question about the amount of volume there on the monthly. How do you view that? It's an incredible amount of volume there.
You know, this is one of those things where it could be that they were forced to do some buying. You know, it could be that the ETN itself, I don't know. I can't explain it. I see it in the weekly chart, and that was the week of the 3 weeks ago, the week of the 18th of January. 1.5 million. That is very big. You know what? I'm going to let Larry speak to that. I'm only saying that if there is a coincident volume, I do work with volume. And I do work with this very thing here. It's called the volume. It's a volume explosion, but it is a volume a price capitulation. I do work with that. I've got a bunch of charts. I haven't got them at hand. Maybe tomorrow, if I remember, I'll show a couple of charts that show if there's a volume explosion with a price capitulation, you can get this is the daily. I haven't done that much work on the monthlies, but on the daily, you could get a 27 to a 38-day rally from something like that. I don't know if that's the case here because you're talking about the monthly chart. So maybe Larry will be able to talk a little bit to that, but I'm going to recommend that you go with Larry's advice, okay?
Yeah, thank you, Basil. Have a good one.
Thank you very much. So let's go to our next one. We've got Dan in North Reading. Hi, Dan. How are you?
Good. How you doing? Happy New Year.
And a Happy New Year to you. We've got a fantastic day today, huh? What weather?
Yes. Yeah. Wow. Pretty balmy.
That is nice. It's a real wow, yes.
So, I managed, I know you don't like to speculate really far out, but I pulled up a yearly chart of the Dow going back all the way to 1932, and I did a wave count on it. And I got a couple of different counts. One of them was I got a peak E in 1973, and then I started another wave count from there, which puts a peak E in the Dow at 2007.
So hold on one second. I'm going to be right with you. I have it. Okay. I think it's right here. Monthly. Right.
Well, I did a yearly.
Okay. You did a yearly. It doesn't matter. So, okay. You know what I'm going to do? Give me 1 second. So, okay. Just articulate your thoughts once again. And while you're doing that, I'm going to just close this workspace, and I'm going to get out and take another one. Okay. So
not so much of a thought to articulate, but more of a kind of what your comment would be on the fact if you got basically the wave count I came up with was a peak F in 2007 on the Dow, peak E in 2007 on the Dow, which would mean, a move above the 14,198 would start leg F on the Dow. And if you had any thoughts about that, or if it's just absurd to look at such a long time frame.
No, but you are doing it on a 1 year basis. In other words, not monthly, but 1 year.
Correct.
Gosh, I wish TradeStation had that capacity for me. I would love to do that. I would do it on quarterlies and yearlies, but this works just as well for me. What I have on the monthly basis is that we went to a peak F back on on October 2007 at 14,198.10. So it you know what's so fascinating to me? I get emails all the time. I don't know if I got any today on the same question, and they say, "Wait a minute, how come it works in all these different time frames?" I cannot answer that. Not only that, my 120-minute chart is not equal bars. There's one bar. I can't remember if it's a half an hour or something. It's wrong. But I still get the right count. I have no idea. So let me explain what I'm looking at here.
Basil, can I say one thing, too?
Yes.
My chart, I use Thinkorswim, and I can't go back that far either. So what I pulled up was freestockcharts.com.
Yes.
So if you ever want to look at that yourself, it'll give you, the high.
No, I can go back. I can go back to 1920 on my Dow charts, but I can't change it from monthly to anything greater than a monthly. I can go shorter all the way to 1 minute, but I can't go quarterly. But I can go back. I've got the chart right here. Anybody looking at Tiger TFNN Channel 1, you'll see all these different things. Made a peak E at the top in 1987. 27.46 was the high. Splat, it goes down. This is it. And there was one peak G, and that peak G was the top in 1990. Otherwise, almost all of them have been peak Ds. Every single one, peak D, all the way from 1990. So if ever there was a system, a methodology that had consistency, I had 1, 2, 3, 4, and then the high in January of 2000 was an E at 11,471. So, and then we've got peak D, and then went to peak F in October of 2007. But to answer your question, the real question you have is that if it goes higher than 14,198, would that continue the previous letter? I think that's your question, right?
Yeah, I mean,
and the answer is, if underneath a previous peak you have subsequent, from the low, you have subsequent higher peaks, I just want to keep counting them. And it counts absolutely if you go to a lower low than the previous starting point. And in this case, the starting point would have been April of 2005 at 10,000. That was the starting point. Once it broke that, it not only broke that, but it broke the 71.97 low of October of 2002. So this is a brand new one. There cannot be any overlap under those circumstances. So let me just articulate, because people ask me about that all the time. If you have a buy signal, and then you go to a D, E, or F, whatever it is, and then the price pulls back but doesn't take out that buy signal, and then you go to a higher peak, there could be a leftover wave count. So then I call it the old and the new. That's why I have right now, theoretically, I have a parallel G, old G, and a brand new C in the monthly chart. But if you go to a lower low, you've negated completely the buy signal, the previous buy signal. You have to get a fresh one. So this is so the answer to your question is no, it would not overlap by carrying over. It's a brand new signal. That's the reason why I'm being so strict. And I'm saying I know that I have to call it G/C, but everything about this is saying to me we have probably started leg C up in the monthly chart, and that there should be a D. So I hope that answers your question.
Okay, thanks, Basil.
Thank you. And always you have great questions. And to you, a Happy New Year to you too. And maybe we keep having great weather like this.
Yeah, right.
Yeah. Let's go to Max in Fort Lauderdale. Hi, Max. How are you?
Good morning. Good morning, Basil.
How are you doing?
Fine. Can you look at call for...
Absolutely.
For add to a position, please?
Okay. So tell me, where is your original position? Much lower down or just recently?
Yeah, around 32.
Okay. If your original position is around 32, that's just before the gap up. The high was on the 31st of December, 32.37. Immediately it pops up, gaps up to 32.97 was the low, and it keeps going. I've got this almost. I'm going to go out a little bit on a limb and say that the doji high made 3 days ago was peak F in Toll Brothers. The weekly chart is exactly what I was talking about just a moment ago with Daniel North Reading. There is an overlapping wave because it didn't take out the original low of 2178 on the week of the 13th of 2012. So this is E/A in the weekly, and the weekly is still looking very good. And it's actually leg B in the monthly. So this is fantastic. Hold on, and I'm going to tell you what I would do, because your core position, don't touch that. We'll look together to see where you can add. Okay? Hold on. Yes. We'll be back with Max at Fort Lauderdale.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. In If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. The Dow is now down 32. S&P's down 4. And just to articulate once again why I wanted to set up our positions of being index short a couple of days ago is because I had so many mixed signals. I wanted to be ahead of the game. Even if I was to lose, it didn't matter. The chances are that, at least for now, we're in a very choppy, going to have a very choppy 3 to 5, maybe 5 to 7 sessions, maybe 2 weeks of just big choppy, up and down, limited upside, and I think at this particular point, fairly limited downside, but we'll see. We're on with Max in Fort Lauderdale. We're looking at Toll Brothers, TOL, trading at $36.93, down 42 cents. He has one great entry, and he's thinking of adding to the position. My analysis is that the building, the housing sector is a little overstretched and is going to take a little time out right now. And the time is a very important one, just a breather, I would call it. So in Toll Brothers, what I'd be looking at, and if I'm correct, at the high of 38.36, let me just type that in, 38. 0.36 of a few days ago with the doji candle is, at least for now, a short-term high. The level I'd be looking at is in the 120-minute chart, which made a peak F in a cup formation, and it's pulling back. It has the chance of reaching the low of 35.52 made on the 22nd, and that could come about on the 4th in the next few days, by the beginning of next week. But I'm really looking at between 35 to 34. 34.26 is the 200-period exponential moving average support. This is what I'm going to recommend to you. Because you have a core position. If you had a core position in a trading position, I would have said to you, take some of the trading position off immediately, because that's what you want to get back on. So now I'm saying to myself, okay, you've only got the core. No, I shouldn't say only. You've got the core, which is fabulous. But you want to add to another position. This is going to be the most difficult time. Why? Because you need patience. And in fact, I wrote down a little while ago, because one of our dinners just spoke about having patience, and I wrote down here an aphorism. Patience is a renewable resource. Your money might not be. So I want you to demonstrate the most patience you can. Even if there's a pop-up in Toll Brothers towards the 37.5, 38, even if there's a new recovery high, my thinking is that over the coming 3 weeks, you're going to get a fabulous entry point for a new position, but it might come with a test between 35.70 to 34.50, and it might come in that H pattern where it comes down, you think it's great, and you start nibbling on it, it goes up, and then it comes back and retests it, maybe even makes a slightly lower low, and you say, oh no. So I would like the entry for this position to be almost time to perfection, if that's possible at all, but definitely not to be early, because you don't want one position to be losing your money when it's a shorter term position going against your beautiful long-term position. So I'm going to recommend hold on. If you don't mind, I'm going to recommend next week, Tuesday or Wednesday, if you can give me a call, remind me, and just to say, hey, let's together look at Toll Brothers. Let's see where it is. I think you're going to get a really nice second entry for a trading position, but I'd prefer to see it coming back about another 2 points. Is that okay?
Thank you, Basil. Have a nice weekend.
And the same to you, and congratulations on that original entry. I'm a little embarrassed to say that we had it in my opening call way back and got out way too early. What can I say? It happens. So congratulations. So folks, Larry Pesavento is coming up. We've got a great program all day today. I'm so sorry, Tyrone, I didn't get for you to call back. I want you to congratulate you personally on being our winner. Now, my opening call is a very comprehensive look at the markets plus our trading positions. Those trading positions, the long positions, we know are going to take a little bit of a hit here, but the weekly charts are still very strong. I want to hold them. We also have short positions. That's the position I'm in right now. Thanks for being here. Stay tuned for everyone. I'll be back tomorrow, and have a great day. Basil Chapman signing off.